we're really pleased to have Dr. Rowe back with us because we've been getting lots of questions, and this time more property-related questions. So over the next 3 days, Wednesday, Thursday, and Friday, we'll be looking at the property market, property investments, and I know this are really coming from two groups of people. One who are already active investors in the market, and they're wondering what is the impact of COVID or Brexit, or this whole idea of people working from home more on their existing property investments. And the second group of people are perhaps those that are looking to buy. Is this a good time? And these perhaps are more advanced investors, where they see that there is fear in the market and they think, perhaps I should be greedy when people are fearful. Are there some opportunities there? So for today, we have probably about 10 minutes. So we really want to drill down to what is really current and all of us are dealing with at the moment, which is COVID-19, with all of us working from home or staying at home.
Yeah.
So Dr. Rowe, great to have you back with us. How's the situation on COVID in the UK, and what are your thoughts on how it impacts property investing?
Question. Am I coming up on your image? Because I've got a frozen screen here, so I just want to check you can see me, that I'm moving and everything.
Yes, you are on my end. Yes.
Yeah, okay, great. So this is a great question, and it's a $64 million question. The reality is that without doubt, COVID-19 has affected pretty much every industry globally, and including here in the UK, which includes the property investment market. I'm finding that most of us that have been in the market a while are taking a very pragmatic view on this, in the sense that it's like a recession. In a sense, you get a market that reacts to it, and then there's kind of a pause, everybody resets, and then suddenly we're off again, and we get a spiral back up. To try and help put it in perspective, I know you know these statistics because you buy here, Daniel, but we have a population of 65 million people. It's growing at roughly about 400,000 to 500,000 people per year. We have a massive housing shortage, something in the region of the average between about 20 and 40-year-olds. We have nearly 50% of that population are renting, and there's a growing marketplace because of the dynamics of our population age group. And so there's going to be a growing demand over the next 15 years or so, 20 years. And PricewaterhouseCoopers did a massive survey on this just recently, about a year and a half, 2 years ago, to state that actually the demand in this country is going to continue to grow.
Yeah.
So irrespective of a situation like COVID, it's like trying to hold the ocean back. The tide's coming in.
Yeah.
Renters need properties, landlords can provide that, and there is multiple strategies in the United Kingdom. So I think the biggest thing that we've seen, if you ask me, okay, so that's the positive side to it. What about negative? The biggest thing is two things. One is the banks have become more cautious just in the last few months, in terms of they're not quite sure how this is going to settle out. So whereas before we might have been getting 75, 85% mortgages, they're just being a little bit more conservative at the moment and holding those back to 70, 65, 70. And now we've got lenders starting to sit up and go, actually, the market's picking up. And it's because estate agents are opening the doors and saying, right, we can go out and do viewings under controlled conditions. And if we can't go to the house, we'll do videos for you. And letting agents now are opening up for viewings as well.
Yeah.
So the banks are more relaxed again, and it happens. It's like the tide flowing in and out. So I think that's one area that we've been hit by. House prices, they have been affected, as I'm sure that you've had a similar situation over there in Singapore. They've slowed down, but properties are still selling. And actually what's happening is now the doors have opened up. So for example, I have one property that I'm selling at the moment, and I've suddenly had a message to say there's four viewers would like to come and look at the property, whereas we had nothing for the last 6 or 7 weeks. So it's a little bit like you've opened the floodgates now, and people want to get back to normal.
And there's some pent-up demand over the last few weeks, isn't it?
Yes. Yeah. Yes, like a dam where you've suddenly built that pressure up, and now they want to buy. So there's definitely going to be people that are in careers that may be affected, and so they may not be able to rent the same houses, or they may have to be more mindful of the type of properties that they rent.
Yeah.
Multiple occupation properties have been slightly challenged because you've got COVID situation. So there is a document that has been issued to landlords and out to tenants. We have to do that as a landlord, which basically states how they should operate within a property. So for example, they have their own cutlery, keep socially distanced, etc. And these are people that rent individual rooms. And then of course you've got the government schemes, which you're very familiar with because you do this strategy, where there's been no effect at all because the government still continue to pay the rent on those properties. We have a really diverse market here, whereas in Singapore, you've really got the middle class and the upper class. So you've got kind of two bands, whereas we have, the working, I don't like to use classing system, but that's how this described here. We have the working system where people are on lower incomes. That's a massive part of the population. We have the middle class, and then we've got the upper class, the higher earners. So we're very diverse, which means that our portfolios and our strategies can continue to work, albeit it has slowed down over this last couple of months. Everybody's
Yeah.
just resetting themselves.
Yeah, it's great. Always great to hear from you, all the way there on the ground. And I think we've been chatting about this for some years now, that, we live in such a globalized world. For the
Yeah.
real astute investors, it's really being able to have a pulse of the ground, both for you over in Singapore and for us in Singapore and Asia over in the
Yeah.
UK. And I always share with, my friends that and my clients that, in such a globalized world, we really want to be investing where the strategy works best, right? And depending on where the opportunities are as well. And in fact, even in the UK, with some of my contacts with my team over there, and they're sharing that how, now that viewings are opened up, and people can do viewings, and we heard you just say that a short while ago, that actually there are a lot, the people that are looking to sell their houses are still looking to sell, but perhaps on the buyer's end, there are the less speculation perhaps, but the serious buyers, the professional buyers, are then being able to pick up discounts because the sellers now find that it's like a buyer's market. So I think there's absolutely a good opportunity if you're looking.
And that's a good point, because if you're a buyer in a job and you're a residential buyer, then you may be affected because of your job situation, which means you're going to possibly be looking to rent longer. So there's a skew, there's a drop maybe in the buyers, but there's an increase in the renters. And that's an interesting factor. I mean, typically, I'm trying to think now, what's the current yields over there in Singapore? Because when I was there, it was very low about 3 or 4 months ago, 5 months ago. I mean, I'm assuming it's still,
still very low.
What would be an average? Because house prices, your apartments, mainly your landed properties, are ridiculously expensive, and
that's right.
your apartment is still entering at 500, 600, 700,000 or more.
No, easily a mil just for a tiny
million,
studio.
right? So your yields are what, Daniel? 2-3%?
2-4%, maybe, yeah.
Okay, so to try and put that in perspective, a typical buy-to-let over here in the Midlands and the north of the United Kingdom, right now we're looking at 8 to 12%. Well, 8 to 10% definitely, 12 maybe in places like Scotland. If you're looking at houses of multiple occupation, you could be looking at yields of maybe 11 or 12% for an overseas buyer. Work on the basis of 10 to 12% yield. That would be, a good number to aim for. But we get a lot of people over here that buy from Singapore, Hong Kong, and they're comfortably getting 8 to 10% yields on properties, and all day long.
And I think that's a great thing to, a great point that you're making, because when people think, of what happens if there's COVID, what happens if there's Brexit and all that, but property as an asset class, especially the way the professionals are doing it, you're not really so what's the word for it, opportunistic. If something happens and then you jump in, and it's not like you're trading the stock market. So perhaps I think people bring a bit of that mentality into the property industry, where actually, regardless of the market situation, you're going to be getting 6-8% yields all day long. And these are not your spectacular properties, but of course you have to be very selective, and we have a very strict selection criteria in the way we select our deals. But at the same time, these are deals that can be found. Perhaps is maybe more about volume. So in times like these, you could find more of these deals, but in other times, you just have to be more selective, in the areas, or the properties don't come all like a rain all at one time.
Yeah, actually, can I just pick up on that? So I think that's a good point as well. When I first met you, and what I liked about your attitude is you weren't emotionally attached to buying in London. When I first went out to Singapore and Hong Kong to teach, although I've been out there for years, but to teach probably about 8 years ago, whenever I met you just before that, there's this obsession with London and the South. But if those of you watching this now, if you can think, these properties are not pretty properties, but they produce a pretty good yield. So think pretty good yield, don't think pretty property. So you're looking at northern towns where the general economy is slower and people don't move as much as they do in the south, so they typically want to rent. So I mean, I've had tenants in some of my properties for like the last 10 years. They haven't moved because that's the dynamic of the economy. And if anything, with COVID, that's most likely going to keep those families in the same places. They want to stay close to their kids, their grandparents. You see all communities together. So
Yeah.
they'll rent, buy spec properties all day long in the same area. And those properties you're buying at relatively low costs. You're talking about somewhere between about 80, 90, £100,000, that sort of price range.
Yeah.
Whereas what can that get you in Singapore? Can it get you anything? A car, maybe?
Probably not. Yeah, maybe a car. Yeah,
Yeah.
absolutely. So, and not even joking, a car here easily costs 100,000 or more.
Yeah, right.
Yeah. So
And it depreciates, Daniel. It
yeah,
depreciates, doesn't it? I mean,
it's
that's the
true.
thing.
And that's where people put
So
their
if
bonuses or their salary to, buying a better car, or yeah, which is
but if that car costs you, I don't know, whatever it is per month on a hire purchase or on a lease, why
yeah,
not take the cash and put it into 2 properties? Get cash flow from those properties to pay for the car. So you can update the car every year, and the property goes up eventually in value, and you get an income from it.
that's a
It's just
great
a
tip.
shift in
Yeah.
mindset.
Yeah, that really reminds me of the video. If you haven't watched our video on being rich in mindset, I'll put up a post up
Yes.
here, and you definitely have to catch that. But the thought about how why perhaps people have that obsession of investing in London, or with COVID, and then everybody's afraid maybe I shouldn't invest, is because they read the news, right? And then what are
Yeah.
people saying in the news is that, oh, in the UK or globally, we're experiencing potentially the worst. We hear things being thrown around like, oh, this is the worst that has happened since the Great Depression, or the worst in how many 100 years.
Yeah.
And a lot of these news are sensationalized. But I mean, just think about it from the perspective of a professional investor. And no offense to the journalists, but very
Opportunity.
often these
Yeah.
journalists are in there for viewership, right? And think about whether they are perhaps professional investors, and are they seeing the market the same way Dr. Rowe and myself and other investors are seeing it. Because I just spent about last week, I was walking through with an investor and looking at the overview of the whole of the UK and going in detail, what are some investment hotspots, what are the opportunities that are coming up, whereas other people are just reading the news on the newspaper and think, oh, maybe I shouldn't invest, and they make that decision based on that. So I mean, if you're
Yeah.
watching this video and you're seriously thinking of making your money work or growing passive income, you want to get yourselves educated by people who are already doing it, walking the talk, right? Don't get your information from
I agree.
everywhere, just a news article, or, and things like that.
Yeah, look, property price doesn't define the market. The newspapers and the newspaper articles don't define the market. The market is already defined. So, there are towns in the north where you can buy a property for £40,000. There's also, towns where you can buy a property for £1 million. So you have to look at that market and say, what's the yield I want to get from that? What's the demand? What industries are in there? There are things called unitary development plans in the United Kingdom. That is a 10 to 15-year plan for that local area, that city, that is set in stone. Once it's established, the government has a demand to get that done. So the local council will say, right, we're going to inject 5 million here, 2 million here, 1 million over here. We want to increase the number of houses over here. We want to find private landlords. We'll give grant money to those people there. And the objective is to upgrade those areas. That's not going to stop. With or without COVID, that's not going to stop, because the government has a plan for that. So if you can tie, somebody like yourself who knows the market, if somebody over in Singapore spoke to you and you said, well, what about here? What about here? They can buy into a market where behind it, there's going to be millions of pounds worth of government money injected into that area. Their property will lift with that value because it's being forced through government intervention. Add to that rental strategies like government renting. So now you've got an income and a property that's going to go up in value. If you buy it for cash, you're going to get a capital yield. You're going to get yield on the income, but you're also going to get a return on the investment on the capital growth over 5 to 10 years.
Yeah,
It's a long-term play. It's not a short-term play.
I was just about to say that, for those of you who've been following our channel, and thank you so much for all your comments and likes on our videos as well. I think you probably get a sense that, we're not about getting rich quick, investing with no money down and things like that. But, really is a systematic process, and a logical one as well. How can you build your wealth that will last generations? how do you build a wealth in an asset that is, backed by properties, bricks, right? And you can literally hold it, and it's going to generate for you that stable passive income with peace of mind, so that regardless of COVID or not. And you mentioned about the government schemes earlier. I'm so grateful that actually I shifted majority of my portfolio into those schemes, so that now, actually, when people ask me and I say actually there's hardly an impact, that they look really surprised. And I think,
Yeah.
firstly, I'm thankful. It's not that I was really wise a couple of years ago, but I think we made the decision to shift to that precisely because of the stability of those longer contracts as well. And I think that's really paying off for us in these times.
Well, here's the ironic thing, Daniel. Let's say you end up with 10 properties in the United Kingdom with a 7-year guaranteed rent on it, for the sake of argument, or a 5-year guaranteed rent. You might be a Singaporean in a job where you can't even guarantee you've got that job in 5 years, which is
Yeah.
ironic if you think about it. You've worked your whole life, you've climbed the corporate ladder, you've done everything you've been told to do, but due to circumstances or health, in my father's case, he became paralyzed at 29, couldn't work really functioning properly right through his 30s till he passed away. He had no idea that was going to happen. So having an asset-based income where you've got guaranteed rent for a certain period, whether it's 5, 6, 7 years, is great, because that's a safety net to whatever else you're doing. You might love your job, but your job might not love you back if the economy changes.
Yeah, and I think it's your bosses might love you and the company might be doing great work, but it's just a function of where things are. And I don't even talk 5 years. I think nobody can really predict what's going to happen in 5 months' time. I mean, the Singapore government just poured out another 33 billion in a budget to protect jobs, to help companies be able to preserve their workers. So, I mean, we should definitely do another video on this. So for those of you who are keen, definitely subscribe, because we're going to put up another video on job security, and also the idea of how we can have that asset-based, asset-backed income to also provide passive income, such that no matter what happens, you have a choice whether you want to continue working, or at least you're not so stressed if you're made redundant the next day.
I just before we started, I wrote a diagram, just do a quick, because like my diagrams for when we do our lives. So for those of you watching, what I've noticed is there's 2 types of investors internationally. So when I go overseas, and if I'm teaching or sharing about what we do in the UK, often people say, well, what should we do? So I've drawn a circle here that hopefully might help. So the circle represents the amount of capital you've got available at any one time. And the split could be that you say, well, look, I don't necessarily want to just own property. I don't want to own real estate. I'd like to have a balance. So one thing that people do is they go on the basis of a return on investment. So they'll take some money and they might invest that through somebody that's already investing, for example, in the United Kingdom. And they say, I'd like to get a 6-7% return on that money there. That's pretty good. I'll leave it there, maybe leave it for 2 or 3 years, and then I'll get that money back from the investor. And over here, this is ownership. So this is where they then choose to take part of the money they've got and buy assets in that country. So it might be that you buy 2 properties that produce cash for you and give you a yield of, for the sake of argument, 10%, and you get on top of that the capital growth. And over here, you take another chunk of your cash and you give it to somebody who's already an investor, and they give you a return on that money. And that gives you a little bit more liquidity should you wish to pull that out in a couple of years, whereas this you might leave there for, say, 10 to 15 years. I don't know if that's making any sense, Daniel.
Yeah, absolutely. And in fact, as we're speaking just this evening, one of my friends who has some funds that are parked aside for the next 1 or 2 years, and he approached me, is there a way we could invest together? So I said, yeah, maybe let's explore that. So, perhaps we could see how we could create a win-win situation out of that. I mean, I did explain to him I'm very selective with who I do business with, but I mean, I've known this person for many years now. So yeah, I mean, I told him, let's see how we could help to make your money work harder as well.
And I think that's a very good point for anyone watching, is if you're in business and you're looking to take money in from an angel, you're working with someone, it's not just about them wanting to trust you. You actually have to feel comfortable enough to trust them. Do I want to work with this person, in the future? Because it might be that they become a partner with you at some point. So it is a long-term relationship, as all property investing.
Absolutely. Great. So I think we've been going full on for almost 20 minutes now. So
oh my gosh, really? Sorry, I got carried away there.
No. It's so good. We always want to give as much value as we can. So for those of you who have enjoyed this video, please smash the like button, subscribe to this channel, share this with your friends, whoever you think might benefit from hearing from this video. and we'll see you tomorrow at 10 p.m. GMT plus 8, which is Singapore time. See you then.